Okay. Thank you so much for joining us today for this live event. My name is Greg Lewis. I'm the marketing manager for Metastock, and I'm coming at you from our satellite studio down here in Southern Texas. Today's host will be our very own Jeff Gibby up in Salt Lake City, and he'll be our guest host will be Jake Bernstein and Brian Latta, and they'll be talking about Jake Bernstein's new JBXC Complete add-on for Metastock. It's also got a, what am I trying to say? Free in Metastock 19 is a indicator that Jake's provided, but he also offers an add-on that he'll be talking about more today. It's been very popular thus far because it's just super easy and super logical, and people really enjoy that. So what have I got to talk about? Our management doesn't normally like us to wear things like baseball caps during our webinars, so apologies now to my boss. We've had a little bit of construction going on around here, and I had to run around and do some stuff. And it wasn't until I plopped down on my chair that I realized my hair was all akimbo, so I had to quickly throw on a ball cap. So go Cougs. That Y is Brigham Young University, but today it can stand for, listen to this, Kelly, why not get Metastock now? Okay, so speaking of Metastock, you've heard of us. We're purveyors of trading software and data for active, self-directed traders just like yourself. And if you haven't tried Metastock yet, you really ought to give us a look. We've just come out with Metastock 19, which is our latest, greatest version of Metastock. It won't be the subject of today's webinar, but it certainly will be part of today's webinar because they'll be showing Jake's new JBXC Complete add-on on Metastock 19, which is, so I think you know what I mean. Anyway, if you haven't heard of us, why don't I play a little video that you can watch for just a minute. Well, 3 minutes, actually. Hi there, Greg Lewis, Metastock Software. As the marketing director, I get asked all the time, what is Metastock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love Metastock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. Metastock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about Metastock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat. Okay, thanks for watching that video. Hey, why not just stick around for a while and watch the whole webinar? I'm just saying. By the way, in case you're wondering why I'm here at all when I'm not presenting, and we are starting, by the way, our main presentation in 3 minutes. Basically, we usually start this a little early with me at the control panels just to give people an opportunity to, settle in, grab their coffee, interact with other people. Speaking of interacting with other people, we've got many people here, but no one's being very interactive. We do have Vincenzo. Good morning, Vincenzo. And of course, my boss is here. Good morning, Kelly Boss. And but as you come on, just say hello. Let us know where you're from. We really encourage interaction and chat, and it makes it just a lot more fun for everybody. We just ask that you do be respectful of the presenters and your co-watchers. Okay, there's a few things I did want to bring up. One, we do have live seminars coming to areas in Canada and the US. If you'd like to check that out, go to metastock.com/seminar. I believe I have already set the link up in YouTube. We this weekend will be going to places like Boston, New York, Calgary, Toronto, Chicago, and I can't remember the last one. But it's an opportunity for you to come together with like-minded traders in an in-person one-on-one situation. It's free. It's a couple hours long. I really encourage you to go sign up. So go ahead and look at metastock.com/seminar. Also, if you are watching this recorded and you'd like to see a live event like this, go to metastock.com/webinar. Or better yet, go ahead and just, I'm on the wrong page. Go ahead and just like and subscribe, and then you'll be notified if you hit that bell every time we have an event like this. And we really appreciate it. We're getting up to 70,000 or so subscribers. It helps us, and also it encourages us to bring more content like this to you guys, and we always enjoy doing that. Okay, we got about 1 minute and 40. I think that's about it. Just make sure to stick around. Why don't you stick around for a while and enjoy this presentation by Jake Bernstein and Brian Latta. For the next minute or so. Oh, wait. One more thing I forgot to say. Nope, I didn't forget to say that. Okay, stick around. I'm going to let you listen to some jazzy music for about the next minute while I make sure we're all set up on the other side and successful trading.
All right. Hey, everybody. Hey, YouTube. Thanks for coming. It's good to see you. My name is Jeff Gibby. I'm going to be kicking us off today. I'll be reading a legal disclaimer, all that kind of good stuff. Thank you for coming. If you are joining us on YouTube, hit the like button, the subscribe button. That helps a great deal. We really appreciate it. If you have questions as we go today, we're going to try and keep this as interactive as possible. So tell us how you're doing. Let us know if you have questions. Let us know if you're not clear about everything. How you doing, Maverick? Good to see you. Vincenzo, good to see you. Let's go ahead and get started. All right, very cool. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in this presentation should be construed as investment advice or the solicitation to buy a security. So there you go. Hope you enjoyed that. I don't have to read the other part, so we're all good there. Our guest today, we have a couple of guests, a couple of really good friends of mine. Jake, I've known for a number of years. He did his first trade in, I think it was 1968 or 1967. You can correct me if he's wrong, or if I'm wrong. He's written 44 books on trading, very, very prolific. He's had a weekly newsletter that goes out, and I think that's been publishing since the 1970s. Does a daily sentiment index, does a lot of really good. I like Jake's mentality when it starts to talk about trading. When he talks about trading, he talks about how it needs to be objective. He talks about it, how it's important that you have a setup, a trigger, a follow through. And I just love everybody. I love the fact that everything that he does is very, very rule-based. Brian Latta, I met a few years ago as a result of Jake. He took some of the stuff that Jake does with the moving average channels and made a really, really cool indicator. In fact, it's an indicator that we include with Metastock for free. We're going to be talking about it in detail today. So just to kind of talk a little bit about the Jake Bernstein expansion contraction indicator. It has a lot of uses for it. Primarily what we're going to identify and kind of talk about is like long-term trend strength, short-term trend and strength, how you can see using the indicator if you're in expansion or contraction, how you can use it to identify support and resistance levels, overbought, oversold areas, or something that Brian likes to refer to as limited. Oh, shoot. But help me out, Brian. Limited
upside, limited upside, limited downside.
Yeah, it's a little bit early still here in Utah. Not as early as it is for you, Brian. Divergences and short-term breakouts. So very, very cool indicator included for free as part of 19. And we built a lot of really cool scanning and stuff like that around it. So without further ado, what I'm going to do is I'm going to have Jake. Jake wanted to say a few things. Then Brian wanted to say a few things. And then I wanted to say a few more things. So we're going to go ahead and kind of kick it off in that direction or in that order, if you would. So Jake, let's go ahead and bring you on here. I don't think you really wanted to kind of share your screen so much. I'm going to make Brian the presenter, but you are welcome to kind of chime in and talk a little bit and say what you wanted to say. Or maybe I need to turn on your, hey, Jake.
We should be good. Thank you so much.
Yeah. All right. So the floor is yours. Brian's screen is shared. I'm here in case you need me, but go ahead. And I know there was a few things that you wanted to kind of mention.
Well, thank you. Thank you so much for that great introduction, Jeff. Really appreciate it. And yes, we have known each other for a long time, seen each other all over the world at various Metastock functions and presentations and so forth. Always a great pleasure to do business with some quality people who've been in the business for such a long time. And just a couple of things. I think full credit really belongs to Brian for developing the expansion contraction indicator. He's a great coach, great person, super, super wonderful human being, just like you guys are over at Metastock. And the good news is that expansion contraction really is one of the best indicators that I've ever seen, not just to promote the fact that we have developed it, but primarily Brian, but also the fact that it's crystal clear. It doesn't require you to make too many decisions. It's right there in black and white, or I should say green and red. And Metastock has done a beautiful job putting it onto the screen, along with the most important feature, which I think is the expert commentary, so that you know why you're doing what you're doing. But I think the overriding concern, as I've seen in my 52 years of trading and teaching people how to trade, is the fact that nothing will work if you don't use it right. And in order to use it right, it has to be clear. Because if it's not clear, by which I mean buy, sell, or do nothing, put a stop here, put a trailing stop here, etc. That's what I mean by clear. If it's not clear, then your imagination is going to take over. And these days, with the internet being what it is, and the speed of communications and the geopolitical situation, not only at other parts of the world, but as we've seen in the last couple of weeks here in the United States as well, there's always an opportunity to be concerned, to be nervous, to use the news to interpret what to do in the markets. And usually, as a technical trader, that does not work for me to interpret. I don't want to interpret anything. I want it to be crystal clear. And that is the beauty not only of Metastock making things 100% clear, but it's the beauty of expansion contraction making things 100% clear as to what to do. So in the long run, you have to decide, if you made money, did you make money out of sheer dumb luck? Did you make money because you interpreted? Did you make money because you followed the rules? Or did the strategy not work? And if the strategy didn't work, was it the system or was it the trader? And that is really what the whole thing boils down to. And in my 52 years of trading, I've discovered that it has to be the responsibility ultimately of the trader. And the trader can't work with the tool if the tool is not clear. So if you want to have clear tools, you come to the screen, you look at the rules, you make your analysis, or better yet, don't even make the analysis. Let the computer tell you what to do. Then the burden is on you. And that's just my brief little opening statement. I'll chime in from time to time, but the balance of the expertise here is with Brian and Metastock and Jeff. So I'll turn it over to Brian now.
Thanks for that, Jake. And we do want to just kind of get right into this. We'll always pull up the disclaimer. This should be familiar to everybody. Please read through this and realize that ideally we are drawing information from the past and disseminating it to you now, assuming that it will behave similarly in the future. However, of course, we do know what reality is, as anything can happen at any time. Still, I would not trade without expansion contraction, or say a clear set of rules of when to get in and where to get out. So you are going to read through this pretty quickly. Jake, I just want to ask you, I know that computer trading is now a large volume objective. And so do you know approximately how much volume is computer trading now?
I would say a good 70 to 80% in my humble opinion, yeah.
Most of it. So why computerized trading? Well, it works. Not every system, every strategy, all the time, forever, but you need to have that, rules to get in, rules to get out, and to be 100% objective. So Jake has gone through a little bit about his background. I did connect with Jake back in 2014, looking for computerized systems, 100% objective rules that could be tested on that. And then for me, briefly, I am a late bloomer to this, didn't really get started in my late 40s, but then went into this full time and making a living out of this. So I'm going to pop up. Oh, sorry, go ahead, Jake.
Yeah, I just had one thing here. When we talk about computerized trading, I think we need to distinguish between computer assisted trading or computer auto trading. I myself, maybe it's because I'm an old guy, I don't completely trust the computer to do all the trades for me, to make all the decisions, because as we know and we have seen and will see more and more, the computer can easily be hacked. The computer can make mistakes, and certainly even with artificial intelligence, we know that computers can, and I'm not using the term out of line here, computers actually can hallucinate. They can see things that aren't there. So I think you have to be really careful to distinguish between computerized trading, auto trading, and computer assisted trading, which is what I much prefer. That is to be using the computer to its fullest extent, the way we've done it here at Metastock, the way they automated this whole thing to the point where the final decision is made by the trader, but the intermediary, the difficult steps, the heavy lifting is done by the computer. So I'll turn it back to you, Brian.
Exactly right. Obviously, as you're saying, computers are not perfect. I'm going to say I'm not perfect either, but I'd rather be the basically the stopgap between a computer taking off and doing whatever and keeping in control of all of the trading systems and rules. I'm going to pop up here briefly the expansion contraction rules, where they are already 100% objective and also included in what you've got as far as the expert advisors. Though we are going to, on the next session, also include more rules. So again, anybody that wants these, they are all available. I am also including Jake's swing trades in here because there'll be some examples of that. And Jake's swing buy and swing sell. And because I wanted to at least also say we both have basically the same style, but different objectives and entry rules on some things, I'm including my swing setups that I will also share at some point. The main thing is it's 100% objective, clearly defined, rules to get in, rules to get out of the loss, rules for taking profit in advance, back tested, and we would assume something that has been back tested should perform similarly into the future. I'm also going to make a comment on, say, an out of sample, meaning if you take a 10 or 15-year test and you have 100% confidence that everything in your system is functioning as it should, be prepared for something that happens out of that sample, and that can be a bit problematic.
May I interrupt for a moment?
Sure, go ahead, Jake.
Yeah, just let me say this. In terms of time frame, we know that increasingly more and more traders are being attracted to day trading or extremely short-term trading. Expansion contraction, as we use it now, can be applied to any time frame, whether it's daily, intraday, monthly, weekly, etc. But ultimately, as you all know and probably heard many times, probably too many times, the big money is made in the big move. So even if you're a day trader, you have to have the big move. The only way you're going to get the big move is by being patient, by having targets, and most of all, by using trailing stops after you're in a profitable position, taking some money off the table and leaving some of your position on for the big move, which in a day trade, you have to wait to the end of the day most of the time. So I'll butt out now and let you have it.
No, absolutely true, because I know we're going to have some that want to day trade, some that may want to short-term swing trade over the next few days, some that may want to trade over the next several weeks or months, longer-term position trading. And so, again, this is adaptable to all time frames. I've tested it down on range bars, tick bars, so it's not just time concentric. Again, due to the rules of how fast price moves up or down through Jake's moving average channel, which I'll just highlight out as the teal 10-period simple moving average of the high and the orange 8-period simple moving average of the low. We're basically looking at how fast price moves up or down through the range of Jake's channel. And clearly, as you can see, we've got B's for buy setups, where expansion, contraction, short-term lines, and long-term trend start to give us a bullish pattern. Of course, we also just coded it with the green bars in this case for strong up. You can see there are red bars coded when the range is bearish and trending. We'll have light red bars when we're in some kind of contraction or weak bear market like that. So everything is in essence coded out, including when there might be a reversal where short-term, long-term expansion contraction turn bearish. We'll get a sell setup on that.
If I could jump in and just say a couple of things, if you don't mind.
Definitely.
So, I'm a simple guy. If there's a trading system or strategy around, I've used it. I've tested it. Literally spent hundreds and thousands of dollars testing and trading systems. So for me, I've become a minimalist. I like it real simple. So I don't use candlesticks. I just use open, high, low, close. For me, candlesticks contain too much information. And for me, as far as the expansion contraction is concerned, for me, it's just a red light, green light. So when it's expansion contraction in the background is red, what I call the cone, it has to turn green for 2 consecutive bars. That gives me my buy signal. Then from that point forward, I'm long straight through until the end of this chart, where it turns from green in the background to red, and that's my sell to liquidate or to reverse the position. So there may be many different applications of expansion contraction using the inner lines as well as the outer lines. But for me, I just like to go for the big moves. And back to you, Brian.
Exactly, Jake. That's the comment here that the duration of the trends, due to the fact on this one's over 100 days, long-term trends are fairly stable. Yes, we get 1 or 2 week short-term trends, but the reality due to the bigger moves in here, the average trends that I've tested out in the strong trending markets over the last few years have been 30 days. And on a daily chart with the system type rules, getting an average of 30 days potentially in a trade is one of the longer durations that I've seen in systems based on daily charts. Do you have any comments on that, Jake?
Yeah, I agree with you. Absolutely.
Right. Well, I know you've done a lot of background data on your own systems and have an idea of, how many days there may be up in a bull swing or a bull trend on average or week. So, yeah.
They're very much a function of the strategy. But I will tell you this: there is an inverse relationship that I've noticed in my trading, and I believe I've made literally thousands of trades. That is, it's usually the very last position, the one that I hold the longest at a profit, that makes me the most money. So 85 to 90% of my trades is where I make my small money. But the big money is made on a small percentage of my trades. That's why it's so critical to make sure that you're keeping something for a rainy day. Of course, trailing your stop, but the most important thing is this: you've got to have the patience to stay with it. And that's, for me, the beauty of expansion contraction, is that it does keep you in the trade for a long time. And furthermore, along the way, as you marked on the chart, it gives you opportunities to get in on the long side or direction with the trend, because we know that none of us is perfect. We all want to take that money when we can, and we also want to have that stop in. So if you get stopped out, as long as expansion contraction stays in the bullish side, you have opportunities to get in at support. So that's my comment about what you said.
Exactly, Jake, on that one. So obviously, and I do want to just work my way over to the right edge and talk about current pricing. It is a bit bearish here. This is not run up right to today because these were taken a little bit earlier this week. So you can see we're bearish on the pricing. We've had a sell trigger, and this is on the SPY, so we're on the SPY. Just want to mark out here on the expert advisor, it is saying the trend is bearish, the strength is strong. Currently, we're in a downswing, and of course the downswing in itself is just a bit weak as we've stalled out here over the last 2 days, and we've seen short-term expansion at least kick in on the second bar here in that last one. So when we're reading through what's going on with the expert advisor, it's also given us resistance and support, short-term, long-term, whether or not we are overbought or oversold, and that will be labeled out here in a second. And whether or not there is any divergence. And it also starts to pop in the profit targets and all of that, and some choices on whether or not you're conservative or aggressive. So it did pop up to just see an expansion contraction. There is the expansion contraction short term. There's a red arrow pointing to the red line. Expansion contraction long term is the cloud or the cone, which in this case is red. And again, short-term expansion contraction bullish here is green. And then long-term is the green cloud or cone on that one. And as you can see on here, at least we've got clear definitions of what the short-term and swing and long-term trend are on this next chart, where we still have the buy setup. Marking in here where the cloud or the cone, the red shaded area here is very narrow. it's inside the standard deviation lines, basically the normal range on that. We'll use that terminology. But we can see when we're weak, when we're weak, when we're weak, and it's usually at either turning points or turning points here also, or at a consolidation. I do want to know if we're in a downtrend, when I want to sell at resistance, or in this case, the defined uptrend with the green cloud or cone. I want to know when to be a buyer at or near support.
May I jump?
Buy on the dip. Go ahead, Jake.
Yeah. You know, when you look at a chart, you see everything laid out in front of you. You see everything that's happened for the last 6 or 7 months or a year or whatever. You say, oh, yes, I would have bought here. I would have sold here. Oh, yes, here's a drop to support. Here's a rally to resistance. I would have got in here. I would have gone out here. Or they say, look at this trend. This is a beautiful trend from the lower left to the upper right. It goes straight up. Not so, my friend. If that was the case, everybody would be filthy rich if they had the ability to get into a trend and stay with it, but they don't. So even though you look at the chart and it looks perfectly beautiful from one part of the chart to the other, the fact is that on the way, living this chart day by day, tick by tick, you're subject to make many decisions that are wrong decisions. And so it's not just looking at the chart and saying, anybody could have made money in this market. The fact of the matter is that if that was true, most people would have made a lot of money. The fact is that it's not true. You need to be able to be consistent with the methodology and trust the methodology, which you can't do until you've learned the methodology. And so by having the expert advisor, which is so brilliantly coded by Metastock, is really the essence of the whole thing, because you want to have confidence in it and see it over and over again and say, here's what I think I should do based on the rules, and then verify that with the expert advisor or the whatever it's called. It's called
JBX, the expert advisor.
Yeah, JB expert advisor. So again, just my general comment. Sorry to interrupt you, Brian.
Oh, not a problem at all, right? After all, this is interactive, and we definitely are okay if anybody has any questions on this. Like I said, we are trying to be 100% clear. I'm going to sit there and say I'm relatively impatient, and how is it that I managed to learn to hang on to trades for a long period of time? Well, I've needed something graphic on the charts to help me with that decision. It's basically just bars by themselves are basic bars, but we really do want to know, are we strong, are we weak, short-term, long-term, and hopefully have it very clear. It did pop to the next chart because it is showing on the gray horizontal line where the red cone here, in this case, right, turned strong down as it's red. On here, the cone or the cloud exceeded that top gray horizontal line. Now these are standard deviation or normal range, and that's telling us, right, if price is inside the solid gray lines there with the long-term cloud or cone, that the trend is weak. Obviously, we broke out, so we'll know when we have breakouts, strong down or strong up. We did want to have identifications of breakouts on that, and we want to at least identify that pretty quickly. So again, it just says running through a long-term stable trend in this case. Obviously, some markets are a little bit more choppy, but we do have clear entries on here. I've started to mark this with some of the drawing tools that are available here in this platform, and marked out with the red S here, basically, or maybe purple, but it's showing where there's a continuation trade to the downside. We were weak. We picked up strength on here. The expert advisor would pick this up until you would expect some further downside. Where is support? Price did manage to pop over towards that support at the beginning of the trade, and of course, at least trailing support here. This is a 3-period ATR based on a 20-period look back, so 3-factor 20-period ATR. I'm use those for an extreme support or resistance, and the diamonds on there marking where you're going to want to take profit when today's price exceeds yesterday's support level on here, calculated by average to range. We want to take some profit. As you can see also on here, we have more profit taking. We'll mark those. The B's here, this is a continuation trade because we had the original trade. and subsequent smaller Bs here are the expansion contraction continuation trades. The expert advisor will also identify those. And again, as we go in, and I'm using the tools here again from Metastock here, we can identify entries where we should take profit, where we may want to take some more profit, another entry on a continuation trade, take some more profit on here. Of course, the rules that I identified earlier have us taking multiple exits out of these, and in some instances staying in through the long run, and these we'd consider to be add-on trades. So any comments on add-on trades, Jake?
Add-on trades are very effective in maximizing your profit. They also give you an opportunity to say, you know, even though I'm increasing on the long side, I'm increasing my average cost, I'm also getting to the point where I can take some money off the table, come back to it, do it again. And in other words, swing trade. So if someone wanted to trade this and say they don't have the ability, the discipline to stay with the entire move, no problem. It's a very forgiving methodology, by which I mean, once you take some money off the table or all the money off the table, you have other opportunities to do what you call an add-on trade. But in this case, you wouldn't be adding on to anything. You'd be starting a new position in the direction of the trend at a specific price defined by the methodology.
I do have a quick question from Dave watching in YouTube. Or actually, I'm sorry, GoToWebinar. Not that it's important. He just wanted to know what the longer-term Keltner channels were. I just gave away the answer, but yeah, the channels that appear on the price chart, the upper and lower ones, are actually Keltner channels. So thought I'd interject that.
20 period simple moving average, 3-factor ATR, just using that was basically outlined by Chester Keltner, who used this, and then also Dr. Alexander Elder, who wrote the Complete Trading for a Living book.
Great book, too.
Yeah, great book. Jake, you had some experience with Dr. Elder?
Yeah. Yeah, we'll talk about that some other time.
Some other time. There you go. No problem, right? It's just amazing the number of people who know the number of people.
Trying to be politically correct here.
Certainly. We'll call it 6 degrees of separation. It's amazing who knows who on that one. So I did label out the buy trigger with the markers that are available here on Metastock, and the horizontal line on here is the exact stop loss value that can be determined with the marker, and I just marked it as the stop loss so you'll know what it is. I marked the entry price on the buy trigger, and the profit 1 target and profit 2 target were both hit about 6 or 7 days later pretty quickly, and the remainder of the trade went all the way till we had the reversal, which I've also marked on here. Really do like the drawing tools, because if you're going to back test manually, mark up your charts when you get in, where you get out of the loss, when you take a profit. The reason I'm suggesting this process is that for all of those I've helped coach over the last 20 plus years, those that get it the fastest are the ones that have done back testing and have proven it to themselves, and they get unshakable confidence in that case. So let's put it this way, my confidence factor is about 99 plus. I'm going to admit to not being perfect, so not going to 100%, but high confidence from the programming, from reality, walking forward. This platform here is pretty nice because it can let us see this graphically on the chart. When you got in, where would you got out of the loss? When would you have taken profit? So how many comments on that use, Jeff, to mark up your charts? What you had done?
I think it's great, and I really like the way that this chart looks. But David, that might be a self-serving statement, but I'm not ashamed of it. David wants to know if the stop levels plot themselves.
They don't plot themselves automatically. I did this manually.
The arrows that we put, so we do put some placements on the chart for where there might be a stop loss come in, but I believe those are the diamonds. And what do the diamonds actually kind of indicate?
The green diamonds are just a profit target, right? If price goes up and hits an extreme resistance, again, if today's high is greater than yesterday's extreme resistance, Keltner channel band, right? Take some profit at that level. It's not exit. It's just that since there's the potential, if we hit a price extreme, to come back to
Well,
average, right? That kind of
Correct.
revert to the mean comment, then we'll at least take some profit at a price extreme.
I guess and the stop levels are kind of plotted in the commentary, or they are mentioned in the
They are.
commentary, if I recall.
I might suggest we make those diamonds a little bit bigger from a visual use standpoint.
Okay. Yeah, we can do that.
So VS1. Sorry, that's a diamond joke.
Okay. you know, I always tell everybody here that the best jokes have to be thoroughly explained.
Of course.
So I am just going to start popping in because I actually went through if we know when to get in, at what price, 434.69 according to the close, and according to the rules, 424.49 to exit at a loss. There were two targets here at 446, and then ultimately I'm going to mark this 17.52% up as it went all the way up to the exit on there. That, of course, turned this trade on a 2% risk on that one into a 6.5% gain. So again, entry, first target, second target because of price extreme, and then ultimately out on the reversal. So hopefully, again, that's not a bad result. And on a 2% risk, personally, that's what I'm comfortable risking. And no, I don't take more than 6 trades with 2% risk in any one market at any one time in any one direction to limit my drawdowns. So
And remember also that your risk is a function of position size. So if you're skittish about using a method, you know the rules, you have the procedure, you have the expert advisor and all of that, but you're still afraid of the methodology. No one's forcing you to trade 300 shares, 600 shares, 500 shares, whatever. You can trade one share and learn a lot. And of course, Brian's expertise, one of Brian's expertise, options trading, which I don't think you've covered yet.
I've not, right? But the reasons to get in or out of an option are identical to the reasons to get in or out of the stock. So again, what instrument are you using for the fixed risk of stock options? Of course, also specialize in currencies. So that's the fun market. And again, thank you, Japanese yen. So our second trade on here, again, small buy. This is a continuation. You can see the pricing. I don't want to just start repeating all this. The calculated stop loss, the first target, the second target due to the diamond at an extreme range, hit a couple of targets quickly. Then we go from the entry all the way to the exit on this add-on, another 7.8% on that one, as I just ran the percent tool from the entry to the exit on a 2% risk. Again, that second trade made 4.69%. Third trade's another expansion contraction continuation add-on. A couple of small targets on here and had a small gain. I don't want to spend too much time on this because it's starting to pick up here. And also looking at the time, we want to be respectful of that. But fourth trade, also a small percent on that because of the pullbacks in pricing and get to break even after the first target. Fifth trade, all that, another continuation and another continuation on the sixth trade. And of course, as we go out, all of these trades, if they're not stopped out for small gains, would have extended on for the larger move all the way to the end. So some got in, stayed in the whole time. Some got in, got up, got out. But that certainly has, once you've got to break even on a previous position, justified at least the add to a winning trade in trend on setups to maximize your gains on that. So any comments there?
Beautiful work.
It's pretty good.
Beautiful work, Brian.
Next chart again, I just popped in here on this. This is now the Qs. We were just on the S&P. So if somebody said, well, more markets, I realize S&P or Qs are similar. They're not exactly the same, but it did this same process here. I marked on this one, the JBXC entries. And then on this JB entry, this is Jake's swing trade in a defined uptrend. Price comes back to the 8-period SMA of the low of the previous day. That is a buy at yesterday's at 8 SMA. And so that shows as an entry. again, we did have a JBXC continuation trade, more take profit. A little further on, another JB swing trade. Jake's swing trades here, done a bit of a mix between the continuation trades of expansion contraction and Jake's swing trades in a defined trend. So more entries, more entries, more entries. Let's at least in an interest of time, pop out, right? First trade hits a target, hits a second target, and continues on for this one, also up 17.29% in the long run. And again, second trade on Jake's swing trade was a small gain in here because it hit the upper band, which is the first target, went to break even, pulled back to break even, stopped out with a small gain, but nonetheless, an add-on trade. I did pop back on the continuation trade was the next setup for expansion contractions. Continuation, that trade did well. Again, there's the 88 periods and a 40-point move. I used this one on the points and length on the drawing tools from Metastock to mark that out. So it was a loser here on the Jake swing trade that came back to support and went a little bit more than the width, 2 times the width of the channel. So not all trades will win in this process, but on that still, as you can see, we get another continuation trade.
Wait a minute.
Sorry, go ahead, Jake.
You said not all trades will win?
Yes.
I'm just trying to be
facetious.
Facetious.
Which is okay.
And by the way, JBXC doesn't stand for Jake Bernstein XC. It stands for Jake and Brian XC.
Ah, okay.
No problem. Everyone understands that.
I'll correct myself in the future.
Also, then again, at least another continuation trade that did take care of the pullback on the swing trade on this one. And then there's another Jake Bernstein's swing trade. I marked the blue arrow at yesterday's, we should mark it here, yesterday's 8-period SMA at the low, fills, does not stop out, and goes up and hits the target and continues on that one. So again, at least from that swing trade, went for another 52 days and up another 10 points. So some of the swing trades may be small losses or small gains. Some of the swing trades will be bigger winners, but we are at least continuing to add on once we are at break even. And so again, if I have no risk, I would prefer to add to a winning trade over go take a new trade and build positions, especially with options. And just kind of quickly going through, being mindful of time again, the entries and stop losses and take profits. Again, another small gain because we get up, take a profit at the 10-period SMA of the high of the previous day and pull back. So again, at least some entries that get up and get out quickly and get us out of danger. And that's it, but that's okay. As you can see, they just keep going in this instance on here. So go ahead, Jake.
Yeah, just remember, when you've got Metastock or any other trading platform that covers literally thousands and thousands of stocks and futures and Forex, you have so many choices. The trades that you make are going to be impacted by the choices that you make. If you're in a trade of stock that's trading maybe a few thousand shares a day, that's got these great big gaps every day, most trading strategies just won't work. You want to choose stocks that are stable, that have a long history, that have sufficient trading volume, that have a stable chart. That doesn't necessarily mean the chart has to go from the lower left to the upper right or vice versa. What you want to do is choose stocks that are actively traded. Tesla, Apple, Microsoft, Adobe, the big names where most of the trading activity occurs, because they're the ones that are going to be most conducive and consistent with the methodology. So don't expect that if you're going to trade a 1-minute chart in an unknown stock with expansion, contraction, or any other indicator for that matter, that you're going to be successful. You're not going to be successful doing that. I'm done. And by the way, I'm going to have to leave a little bit early today, so I'm going to be logging out in about 5 minutes and leave the rest of the hard, heavy lifting to Brian and Jeff.
Thanks for that, Jake. Though you're completely right on this process. So I still also recommend high volume, personally 5 million shares, average 20-day at a minimum. And because I'm an option trader in the stock market, then I'd need to see weekly options with high open interest on that. So very liquid markets, easy to get in, easy to get out at your price right now when your rules are true for a small cost. Those kind of markets, as opposed to, as Jake said, we want to go down to a penny stock that has a 3-cent range and expect to see a chart like this. So definitely depict liquid markets. Okay, so just a final comment I'd like to say, I still see the expert advisor definitely confirms the clearly defined setups and triggers that were put into expansion, contraction, and back tested with the clear rules of when to get in, where to get out at a loss, and when to take profit in advance, and back tested. Even Jeff, you did the back test on the entire S&P 500, which I'll have to say personally, I didn't think running the entire market, but those results were actually quite positive also in that instance. You remember running that test, Jeff?
Oh yeah, we ran that and we're like, oh wow, these are really, really good results. And usually, like, you have, I mean, it's very telling when a system actually performs well on an aggregate number of stocks. Yeah,
Yeah, everything.
It gives you a little bit of confidence, at least. I won't speak to the statistics of that, but it does give you quite a bit of more confidence if it works in a variety of different situations and scenarios. I do have one question that we do have that I promised to ask. A gentleman by the name of John emailed some questions, or a question that I wanted to kind of make sure that I got in here real quick, if you don't mind.
Sure.
Just let me say one thing before you do that. You know, the bottom line is you've got literally hundreds of tools on Metastock, including this one. None of them are going to work if you don't do them, if you don't do it consistently. So you can't just look at a chart and say, I think there's resistance over here, or I think there's resistance over there, or let's use this indicator, or let's use that indicator. You have to know what the indicator is doing. You have to know what the rules of the indicator are. It's not just a question of saying, oh, the 50-day is above the 200-day, and I've heard it on TV, let's do that, because there's a lot more to it than that. It's all based on psychology, methodology, and technology. And so, again, I want to just bow out here and say, thank you so much, Jeff, for providing this beautiful Metastock platform for us with the expansion contraction. And thank you, Brian, for being my very, very close associate in this methodology. And we look forward to seeing people at the webinar we'll be having on expansion contraction. I'm going to leave it to you guys.
Okay, thank you, Jake. Same here before you leave. Just appreciate all the help, the support, the friendship over the years. It's been a lot of fun.
Same. Thank you.
All right. Okay, so Brian, here's the question.
Sure, get the question. And if you have to take it back to the live charts on your side too, that's also okay.
Absolutely. For this one, he kind of talked a little bit about the MAC channel, and he wanted to know. Actually, he's talking about some of the some things that are not topical to what we're talking about today. But what he wants to know is if you have specific strategies that you employ to help you avoid whipsaws in the market.
Let's put it this way. One day sudden reversals. No, I don't know the future. Either I'm going to take a small loss. Yes, those I'm going to call. That's about the worst that could happen other than consecutive losers. So the idea here is to trade the range when the market's weak and trade the trends when the market's strong. But sudden reversals, no. However, over the few periods, most of these indicator settings setups will help us within a few days catch some kind of short-term reversal like one way and slip back the other way. So sudden reversals, consecutive losers, they are our problem. We need to minimize the frequency of those and the duration. Hopefully that helps.
Yeah. I think a couple core things, and I don't think you'd disagree with me, is position sizing, so that you're not trading more than you can afford to lose, right? And then just respecting your stops. I think those are just critical parts to the discipline of trading. So
break the rules or your results are garbage. Garbage in, garbage out. Unfortunately, even artificial intelligence based on garbage is garbage. So what I do like about market data is it's already known, it's a reality, and that's what we're basing all this on. Even Jake's seasonality based on the reality of the past, and past patterns repeat. That's basically the foundation of this also. And if that makes
Awesome.
sense on here, recognizing that the strategies here can't stop sudden reversals or consecutive losers, but we do want to limit those. And yeah, your money management's key. You heard me say 2% and a limited number of trades with risk at once. Scaling in, scaling out helps keep the drawdown small. Less than 20% for me. And I'm aggressive with strategy, conservative with risk.
Awesome. Old and bold traders, right? All right.
Definitely old, but I will say the older I get, the more artificial my intelligence is becoming.
Hey, I am enjoying the final days of my 40s the next couple of weeks. So anyway, all right. I do want to show a few things to just show off a couple of the things that we designed. Brian, thank you for kind of taking us through all this stuff. Great job today. Appreciate the work you've done on this too. It's such a cool indicator.
Thank you. So I stopped sharing. You should be able to take back the screen here again.
Right.
I'm certainly glad to answer more questions from whatever you set up on your end.
Okay, very cool. And I just kind of want to go through it. One of the things, actually I'm going to turn on my camera too. And just kind of, and feel free to chime in if you have things that you want to talk about and stuff. One of the things that initially happened when we started to kind of design this out, we designed the initial indicators, and is my screen being shared, Brian? Because like all I can see is a picture of me, and I can't seem to move it.
I see your screen. We see GE on your screen.
All right, cool. I'm gonna turn off my camera because I can't get it out of my way. But like, okay, so what I wanted to do is just kind of initially, Brian had sent me a document that talked about all the different uses they had for JBXC, and they're all listed right here. And it gave me some ideas in terms of what we could do to kind of help make this make sense and kind of make it right and legible. And the expansion contraction, long-term and short-term trend strength, swing short-term strength, range and expansion contraction. And I thought the best way that we could kind of go in and actually kind of identify these and kind of help you understand as a user of the JBXC is to kind of put together like a proper dashboard. So if you're familiar with the commentary, what I've got applied is like the full version. The commentary comes as part of the add-on that you can buy for JBXC. And I just want to kind of give you an idea of what that dashboard looks like. So I'm going to go ahead and pop out this commentary window here. And if I'm looking at, well, actually, I made it go away. Let me go ahead and get the commentary back open here, and then we'll pop it out and I'll just pin it here. What I wanted to do is by default, it's going to look at the very edge. So if we're looking at kind of the very edge, the hard right edge of the chart right now, it's going to tell us for long-term we're bullish, but we're not trending. For short-term, we're in an upswing, but the strength, it's consolidating. With the range, we're in an expansion, and the strength of that expansion is strong. So we kind of tried to go in and kind of spell out exactly kind of what the rules were and what they look like. And certainly that's something that is very, very helpful. In terms of the resistance and the support, using the rules that Brian provided, we kind of list out exactly what those are and where they're forming so that you can see them on the chart. So you can see right here that our major resistance would be at 166. Our major support would be at 84. And then our minor resistance is still 166, but our minor support's a bit higher, 146, 678. So in terms of overbought, oversold, which would mean limited upside in terms of the way Brian likes to say that. And it will also detect those divergences as well. So if we're on a trade right now, we did have kind of like a buy opportunity here. There are buys that are actually kind of immediately placed on the chart. And these are automatic. You can see right here, the little b, that's just basically a trend continuation buy. It gives you an opportunity to kind of get back into a trade or re-enter a trade if you've stopped out. And you'll see a bigger B right here. If I hover over it, it shows it as a strong buy. So if I'm in a long trade though, what I want to know is where my stops are going to be. Those aren't listed on the chart like you were asking earlier, David, but they are listed right here. So my maximum loss would be 89.16, our first profit target. Yeah, would be 94.13, conservative, and those are all listed for you, and those will be updated as well. So in addition to that, we kind of have some more information that talks a little bit more about how that works and how that. So I really kind of like the dashboard view. I like the multiple uses that Brian kind of really spelled out for the JBXC, and it really gave me the idea to kind of come in here and kind of put together just, okay, well, what is it doing? Let's kind of put that together in a dashboard so you can really, really kind of see it. So now, everything you see on the chart, Brian had added a lot of changes to his chart, but everything that you see on a chart, this particular chart is going to be what's actually kind of showing up in the chart. I did add the JBXC Keltner channel. It's not part of the thing, but it is actually something you can just drag and drop onto your chart. You've got your buy, you got the long position take profit notifications, the continuation buys. Those are all automatic. So if you followed me for a while, if you've seen me talk about Metastock before, I always talk about how I like to scan with Metastock. Jake talked earlier about kind of all the choices that are actually available for stocks. You know, if I'm looking at options, there's literally like 5,600 stocks that I could pick from. And so for me, one of the things that I like most about Metastock, and one of the things I think Metastock does best, is the ability to go in and just kind of weed out the stuff you're not interested in. I scan every day, twice a day usually. So when it comes to scanning, what I'm going to do here is I'm going to open up our Power Console. I'm just going to kind of talk about the explorations that we've put together. The idea behind scanning is like, okay, so if there's all these choices that we can pick from, how do we know which ones we should buy? Or how do we kind of shorten our list? We're not going to look at 5,600 stocks every day. And to do that, a great way to do that, especially if you're using something that's objective, like the system that we developed with Brian and Jake, is you can scan for it, right? So I've come in here to the scanner. I'm going to go ahead and turn off any of the scans that are here, but I just want to show you how easy this is. So if I type in JBXC, I can look for stocks that have a bullish or bearish divergence. I can look for the buy signals. This will look for both the strong buy signals and the continuation buy signals. You can look for stocks that's in the long-term bullish or bearish trend. And you can look for sell signals, which would include the strong sell signals and the continuation sells. And you can also look for the short-term breakouts. So if I wanted to run this, I'm going to show you how easy it is. I'm going to run this on I'm going to run the buy signals. I'm going to run it. Let's just run it on a quick list. So I'm going to do, let's go ahead and pop this in. I do want to point out, we do have a lot of coverage with the data provided that we get. We get our data from London Stock Exchange Group. We get all of our news. It basically a huge instant news. It's a service that used to be called Refinitiv, but it offers just about anything that you want in the world. In fact, I could scan anything that I want in Asia. They have a great collection. We have actually a lot of people that are in Australia that use Metastock. We do a lot of Australian-based classes that are very often India, Europe, Middle East, Africa. You name it. I think the only market that I wasn't able to get one time was the Jamaican Stock Exchange. Almost everything else is covered. There's about 326. But for me, when I'm usually running a scan, I want to find stuff that's generally pretty liquid. And what I'm going to do is I'm going to come down here, and I've got the NASDAQ 100 selected right now. I've got the S&P 500 selected, and that should be good. I could add the Dow in there, but that's not really going to throw a lot of stuff in there. But we'll just run this to kind of show you how easy it is to kind of weed through these. I'm going to go ahead and start this. And I know, because this is the list I run as I scan every day, that even though we've got the S&P 500, the NASDAQ 100, and the Dow, there's a lot of overlap. We're going to run this on 520 stocks, basically. So, and what we're doing right now is rejecting about 94% of those. So right now it says 94% of those. What I'm doing is saying, okay, well, just provide me a list of candidates that have either a buy, a strong buy, or a continuation. Give me those in a list, and let me see what those look like. And I'm going to go ahead and let it finish. And as you can see, it goes pretty quickly. It's even going to go, it's going to depend on your internet speed, but keep in mind, I'm sharing my screen. We're broadcasting audio to both GoToWebinar and YouTube. And so it does go a little bit slower when you're using a lot of bandwidth like we are right now, but it's done. So in any case, right here, if I'm just looking at the report, right here in the strong column, we're going to have strong buys. That'd be quite a few of them, actually. I could open these up. I could save them to a list. But now instead of looking at all 520, I'm going to look at maybe, exactly 26. 494 of them I just don't have to look at. So that makes it easy. It allows us to kind of focus on stocks that have an opportunity. I love scanning. It's something, like I said, I run it all the time. So with JBXC, I'm going to kind of go ahead. Brian did a really good job about talking about how these indicators were put together. But with the expert advisor, if you get a strong buy, you'll notice right here it says a long-term trend change to bullish, supported by a short-term trend upswing, gives you some information about what's going on. It's going to give you entry recommendations based on a new trend, or whether that's a trend continuation. If you have a trade, you're going to have exit recommendations, profit targets, stop losses, and you get that dashboard view that just kind of helps you remember all the stuff that JBXC is looking for. So I talked about scanning ad nauseum. Again, here's the list of the scans that you can run on it. Not going to read them again. And then the system test. So there's a couple system tests that you can use. One that the two that we put in there as a stop and reverse system, or a stop and reverse with re-entry. Both of them test phenomenally. This is that basket that we've tested against the S&P 500. And you can see the ones that worked really, really well. There wasn't a lot of them that didn't work. And very, very good results from this, which didn't surprise us. Actually, we were pretty surprised with how well it worked. We all liked the indicator. We knew the indicator. But even Kelly, who kind of ran the initial test, was like, wow, this thing is impressive. So that's the system. You get all of that kind of stuff that's kind of broken up together. You get the expert advisor, the explorations, the testing. And we are going to be putting together a special boot camp for new users of JBXC. This is going to be next Friday. It's going to be noon Eastern time. Now, there's going to be two parts of this. Basically, we'll have a part where we kind of talk more about JBXC and kind of how to look at it, how to use symbols and that kind of stuff. This is a customer-only class. And then I'll be coming in to do a second part that kind of talks about how to run the scans, particularly the system testing on the program, how to make lists, how to save lists, how to look at charts, just some general, here's some good advice for how to use Metastock type of advice. So that's going to be not this Friday, it'll be next Friday. It's going to be at noon Eastern time. And we're going to invite, if you've bought JBXC already, we're going to invite you to it. If you haven't bought JBXC, as long as you're an owner by the time by the time we do the class, we'll make sure that you're invited. So if you can't make May 10th at noon Eastern, we will record it. It'll be something that's available for you and within probably the next week. So and that'll be just up on your pages. So with JBXC, go ahead.
Sorry, may I jump in there a little bit? Because
for sure.
On the 10th, that's going to be more rules. We're glad and happy to share all the rules. So I'm going to post more rules there of everything. As Jake doesn't mind giving them away, I'm giving them away. We're giving away what we can in order to make this useful. But we're also on May 17th doing a webinar. If it's okay if I just post that link, it's a really cheap 2-hour webinar on more an expansion contraction on the 17th of May. So
for sure.
Mind if I post that link?
Yeah, no, I don't. Of course.
Okay, just wanted to make sure before I actually sent it. And that's off of Jake's site. And again, it's a really low cost on that as I just sent out client pricing. So, but we do want to make sure that everybody understands it 100%. After all, what did you like about the Metastock expert advisors? It really is showing reality at the right edge of the chart. And that is the benefit of expansion contraction.
Cool. Okay. And there's the link. So, and Greg, if you would grab that out of the GoToWebinar chat and put it in YouTube for us, if you don't mind. All right. Cool. Thanks, Jeff. Cool. All right. So if you want to get JBXC with the scanning, the system testing, it's a one-time purchase. We do offer it with a 30-day money-back guarantee. If you haven't used Metastock before and you want to get it, we'll offer it with a free trial to Metastock. So you can pick it up, you can purchase it, you can give it a go, see how it works for you. You can do all that by getting in touch with us, metastock.com/JBXC to go ahead and buy it right now. If you have questions, if you want to pull charts, if you want to kind of talk a little bit about kind of what it does with one of our sales guys, we'd love to talk to you. You can give us a call, 800-882-3040, or you can visit us online at metastock.com/saleschat. So that's how I've got, Brian. Thanks for.
So that's it for now.
Okay. If you guys, it's been very, very popular. It's been very, very well received. I encourage you to try it. And we'll even give it to you. And if you don't like it, if it doesn't help, we'll give you your money back. So the link for that, again, is metastock.com/JBXC. I think that's it for us. Thank you again, Brian. Jake is no longer here, but I want to thank him for everything that he's done over the years. Also, if you ever need anything, give us a call. Thanks for being here. It was good to see you. Thanks for all the questions. We'll see you at the next one. Stay healthy. Stay well.
Hi, Kelly Clement here from Metastock. Before you go, I have two quick things for you. One, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTubebook, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those two things. Thanks for joining us and keep on trading.